And today I just wanted to go over what does term life insurance mean. So there is all kinds of different life insurance portions. There's going to be term, whole, index universal life, accidental insurance, disability, all these different ones. What is term life insurance? Term, specifically life insurance, is a death benefit for a specific, and the term refers to the how long we're locking in the payment for. So, for example, if they call it a 10-year term, that means that payment is stable and the same for 10 years. After that 10 years is up, yes, the policy can still be active. It's just the price is going to be dependent upon age at that point. So, for example, if you were 50 and you did a 10-year term, your payment of, let's say, $100 was $100 per month for that full 10 years. If you continue that policy at age 60, now you're going to be paying what age 60 price would be. And then also when you turn 61, it would also go up because obviously the older we are, the more expensive that the life insurance can be. So there's, for us, for example, here at our agency, there's going to be options for a 10-year, a 20-year, or maybe even a 30-year term. And what that means is, let's say we selected $200,000 as our death benefit. That's how much we needed to cover. And we were 40 years old. Let's say we wanted a 30-year term because that would put us to age 70. So we would be paying for the $200,000. Let's say it came to $50 a month. We would pay that $50 per month for the next 30 years. And then after that, we would be age 70. And then we would pay age 70 price. And you can't go all the way up to 80 years old. But that's basically what the length of the term is, how much we're locking that payment in for. The big thing on a term policy is there's not any investment portion like an index universal life or whatever it may be. But it is going to cover a death benefit in case something horrible happened. The reason why term is sold a lot and people typically get a lot is because of the price point. Because there is no additional investment needed payment wise. So you can get typically a lot more death benefit coverage than you can whole life at a lot less price. The thing with term is typically, we want to supplement that with some sort of whole policy that we will have our whole life. That way we continuously have life insurance. But if you look at it this way, at most times when we're age 30, we're not set up to retire. But by the time we're age 70, we hope we're at retirement age where we have a lot of things paid off. We don't have a mortgage anymore. Maybe we own the house free and clear. So our spouse doesn't need that, or our kids don't need something to pay off the mortgage. And, if you're leaving everything to your kids. So therefore, you might need a higher dollar amount at the start, but maybe not as much down the road. But for example, let's say we determined that we needed $1 million total of life insurance at the time that we're sitting down going through what we need to cover. So at that $1 million whole or index universal life or any lifelong policy is going to be quite expensive, even let's say at age 30. So a lot of times what we will do is maybe we can only afford $200,000 of that's permanent, and the additional $800,000 we will run on a term policy. And at the end of that term, hopefully we don't need that additional $800,000 in term that we had to write. Now you can convert that term at any point as well. So for example, once the application is approved, let's say in 10 years, we were 30 years old when we did this originally. 10 years from then, we were 40 years old, and all of a sudden we are a lot better off financially. And you would like to consider, you can move part of that 800,000 or that whole 800,000 and convert that into full or permanent or whole or whatever they're calling the product. So for example, let's say we had 800,000 and I had 200,000 permanent. Now I can add 300,000 more permanent. So then I'd only have 500,000 term. So you can convert that 300,000 of that in order over to whole, because maybe let's say you'd like to have a $500,000 that lasts your whole life, or for the kids or for spouse or whatever it may be who you're leaving it to. you want to make sure that they have a 500,000. Well, to make sure we get that correct, we need to convert that to some sort of permanent policy that is going to last until your death. So that's what term does. A lot of different things. It gives us a lot of coverage for low dollars amount, but specifically when they're referring to term, it is for how long we're keeping that payment steady, whether it's 10 years, 20 years, 30 years, or some other companies might have 5, 10, 15, 20, so on and so forth throughout. So I did want to thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever great platform you're listening to us on, whether it be Google, Apple, Spotify, or any of the other great ones out there, I would much appreciate it. And I look forward to seeing you on the next episode.